Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for more candlestick patterns, then go look someplace else. But if you want to start trading like a professional, stick around. So today we ran 6 baskets, all in the energy industry groups. And I ran it with no filter at all, but then I've added 0.8 correlation, 0.8 RW coefficient. Let's add in 3 winners and 5% up and down and see what we come up with. And we come up with still quite a lot. But there's 2 down here I'd like you to take a look at. Let's look at this one first, because we're going to take a look at something that I normally don't show. So if we take a look here, INT versus GEL, that's a very nice picture, a very good back test. And it's just stepped outside the second standard deviation, looks like yesterday. So all of this looks good, right? Everything looks very nice on that picture. Let's look at a second one. The same front end, INT, MMLP on the back side. Not quite as good of a picture. It's not quite to the second standard deviation. It also has a perfect track record, however. It looks like the motion has been a little bit larger, and it's overall a good picture. But this time I wanted to go take a look at something over here, okay? I normally don't show this. So let's go look at INT, who was the first one, versus GEL, right? So this was the first pair, and if we take a look, this is the information from the principal component analysis. We can see here that both of these are above the standard deviation from their model. It is saying that we're going to sell INT and buy GEL, which is what we're looking at on the other page. But I prefer things when the one we're selling is above its mean and the one that we're buying is below the mean. So that's why I think I prefer this one today, because while the side INT is the same, MMLP is in a better spot. Okay, they're each about 1 standard deviation, one above and one below. This is a type of picture that I prefer. I look at this analysis a lot, by the way. I just don't typically feel like we have time to look at it during the daily recommendations. So trust me that it's there, that it's been looked at, but today I thought it might be fun to take a look at this. So basically, we're going to be taking a look at INT versus MMLP. Let's go ahead and add it to the Observe page. And what we see is, that it actually came outside the second standard deviation today. So it actually took a pretty good move up. So clearly, as usual, when it's still moving the direction away from the mean, we're going to watch this. We won't just jump in automatically, but it looks like it's in a very strong position right now. It's again hitting numbers that it's never hit before, and this is with a pair that has good numbers historically. Let's take a look at the hitting probabilities. Mean reversion is indicated in a strong way. Let's run the Monte Carlo simulation. And the latest value being 8.24, let's say. It's saying we're going to be below that number 91% of the time. That's pretty strong numbers. It's saying that we're going to get back to the mean half the time in 38 bars, but the mode being 23. So these are good enough numbers. I like this. We're going to make this the recommendation. Let's go back and take a look at the detailed page one more time. So we're talking about INT versus MMLP with a ratio of 2.09. The correlation is very solid at 0.83 with the RW coefficient at 0.74, very strong. It's got a perfect track record, and it has just today jumped outside of the second standard deviation. So the recommendation of the day, INT minus 2.09 of MMLP. It is a short, so for every share of INT that you sell, you're going to buy 2.09 shares of MMLP. Good luck with your trading.